PMI for Markit. We'll have the ISM coming in a bit from the ISM people. We have 59.1, which is like exactly what we expected. And if you take the 59.0, that was the mid-March read, that now becomes, of course, 59.1. It is the second highest post-COVID number. Beginning of the year, January, we had 59.2. And as I said, ISM will be coming up at top of the hour. Let's look at an intraday chart of 10s. You can clearly see that this morning, the slight reversal in jobless claims, instead of moving lower, they inched up just a smidge. But the market was very cognizant of that. And do keep in mind, if you look at a 3-day chart of 10s, being a technician, we are now under the last 2 days' lows. And that is very key, because if you open the chart up to early March, you can see that that 160 mark is going to be key. Listen, I think that we have an interim top here. It might not last long, but I think we're going to test lower levels. Maybe one of the catalysts, of course, is, sometimes appropriating money is good. Stock market seems to like it. But at the end of the day, we're creating an awful lot of debt, and there may be a bit of indigestion. And I think, at least with respect to the Treasury complex, losing a little bit of that, they think the economy is going to be going gangbusters. There's no productivity in this infrastructure bill that's coming, no matter how much it's posted as such. Look at Japan's infrastructure bills. No productivity ended up there, and corporate taxes going up. If the reason rates were going up is because of excitement about the U.S. economy, raising corporate taxes has to be the anti-excitement factor thrown into the equation. The dollar index also, remember, rates have been going up. Nobody really expected that. Dollar's been going up for sure. Not many investors expected that. So if you look at a 1 week of the dollar, you can see if we start to slip and close under 93 even, we're going to lose momentum there, very similar to the 10-year charts. If you look at a 2-day of the euro versus the dollar, if they start to trade and close above that 117.60 level, yesterday's high, because much of the strength in the dollar has been weakness in the euro, and in my opinion, the infrastructure bill puts us at a more equal footing, taking away some of the U.S. economic advantage, at least in the near term.
Shepard Smith here. Thanks for watching CNBC on YouTube.